analysts have been steadfast in insisting Facebook, FB, continues to be a buying opportunity despite the data scandal with Cambridge Analytica that erupted on Saturday, but a quick check of the social media giant's stock performance of late shows the company's shares aren't heading in a bullish direction. After gapping down Monday in the immediate aftermath of the scandal, shares plunged below their 200-day line on Tuesday. Volume on both days was high, at 246% of normal on Monday and a whopping 367% on Tuesday, clear sell signals. Further, Facebook stock flashed another sell signal on February 9 when shares closed below the 10-week moving average on elevated volume. On top of that, Facebook's relative strength has been lagging the market since November, a warning sign of further underperformance. Facebook stock was down 3.2%, near 164 at midday as the stock market today, again in high volume. But analysts are continuing to double down on street comments. RBC analyst Mark Mahaney reiterated an outperform rating on Facebook and price target of 250 in a report to clients Thursday. To cut to the bottom line, Facebook has been and remains our number one long in the large-cap internet sector, Mahaney wrote. We view the medium-term and long-term risk-reward on the shares as downright compelling. Reports from UBS, Cowen, RBC and others on Thursday followed other reports this week that have reaffirmed what essentially are buy ratings on Facebook. The latest reports also had positive comments on the interview performance of Chief Executive Mark Zuckerberg on CNN Wednesday evening, preceded by his first public comments on the Facebook data breakdown. After the market close Wednesday, Zuckerberg responded, after 5 days of silence, to reports about Cambridge Analytica obtaining millions of user profiles by abusing the social media giant's data sharing abilities. Zuckerberg outlined 3 steps the company will take to prevent abuses like those that occurred with Cambridge Analytica, which was involved with the sweeping collection of personal data on some 50 million Facebook users without their knowledge. UBS analyst Ken Sena maintained an overweight rating on Facebook and price target of 230. He referred to the 3 corrective steps Zuckerberg presented Wednesday as constructive, but added, "We expect that Facebook will continue to face tough questions and that senior leadership is likely to be called to appear before legislators in both the US and the UK." Piper Jaffray analyst Sam Kemp maintained an overweight rating on Facebook and price target of 210. There's a lot of negative sentiment baked into Facebook after the revelation of data extraction by Cambridge Analytica and Facebook's botched PR responses, Kemp wrote in his note to clients, saying he would take advantage of Facebook's sell-off. Advertising revenue growth is unlikely to be impacted given the nature of Facebook's advertisers, and we believe that negative user sentiment is greatly overblown by the media, Kemp wrote. Cowen analyst John Blackledge maintained an outperform rating on Facebook and price target of 220. Overall, Zuckerberg's Facebook post and CNN interview struck the right balance of acknowledging Facebook made some mistakes and plans to be proactive protecting user data going forward, giving us more confidence Facebook will be able to navigate these issues, Blackledge said in a note. You might also like, Facebook dives as data debacle highlights systemic risks. Forget Facebook, why these 5 chip stocks are stock market bullish. S&P 500, Dow Jones futures await Fed rate hike. Facebook, FB, stock quotes, company news and chart analysis.